Hey folks, welcome to Market Technical Analysis by InTheMoneyStocks.com, your leader in pure technical analysis, avoiding all that Wall Street hype. Today is Monday, April 21st, 2008. I hope everyone had a wonderful weekend. It was beautiful weather in New York anyways. And as we get into today's video, I really want to focus in on some key factors in this market because we're already seeing a shift in psychology. And we all know from past experience, and especially in these videos, as we've been able to call the market so accurately, basically every move up and down in the market over the past 6 to 12 months, we know that psychology plays a key role in the market moves. Now, it's not the only factor, but it's one of the main factors in there. Also, we look at price, pattern, and time, along with a few minor indicators that we use overall. But for the most part, price, pattern, and time take precedence over everything else, along with psychology. So let's get into the market and see what happened today. You all know that watched on Friday's video that we said the market was very likely to consolidate today and have a pause day. And as we all know, after a major move in the market, especially after a week with such a big move going into Options X last week, it's very likely that we have a couple pause days in this market. Now, the pause day could be a flat day. It could be a little up. It could be a little down. But you really see just kind of a consolidation pattern formation. And we saw that in the markets today. So just before we get into the intraday chart on the ES futures, I want to just go over the intraday, the markets movement today. We saw two of the three indexes we follow most closely down, with one being up. And as you guys know, that's exactly what consolidation is. It's a flattish day with the Dow just down 24 points. The NASDAQ was up 5, and the S&P was down 2. Now, you can see on this intraday chart that that's exactly what had happened. When you see consolidation day, what do you see? Well, you don't see a chart that goes like this, obviously, and you don't see a chart that goes like this, obviously. What you see is the choppy action that you're seeing before you, and that's exactly what we saw. So here you have the choppiness. We had little moves up, little moves down, all day long, up and down, and every which way as I'm drawing them in. Really no reason other than just to show you the choppiness of this pattern today, with the markets basically ending where they started or slightly lower, right around there. So we ended slightly lower here, but really to no avail. You had the futures almost flat on the day for the most part, and it was just a consolidation day. Volume was so light, which is another characteristic of consolidation. After a mega move on Friday, people just kind of stayed out of the markets. The markets digested their gains today, and the volume on the ES was like 1.3 million. I mean, it was minute. And that's, again, another sign of the light volume consolidation pattern that we're watching. So let's look at the daily SPY. And number one, look at the volume down here, guys. This looks more like a Friday in August volume than anything else. It's really unbelievable. You can see the volume here on Friday on the big move, and we did like half of that today. And even Friday was not that big. I mean, it was good for an up day. It was solid to see that in an up day, as it was bigger than the previous days. But nonetheless, the volume today was just unbelievable. And the markets were sleepy, and that's what it is. So we just focus in on that, and then we try to look at the chart patterns and see where the next move is coming. Now, let's take a look at this SPY again, and here we have the SPY, and you guys know the chart patterns, the breakout. We can draw on these trend lines to really focus in on things. Now, we're consolidating right on this line, all right, and that's going to be the key, is do we consolidate on this line before another little push up? And again, we happen to believe it in the money stocks that the major move is over at this point. You're going to have probably a little more upside in this market, but the real goal was obviously to get in here when the Bear Stearns news came out, where we called the bottom when everyone was ready to jump out of an airplane there or jump out of a building. And then the second area to re-enter was either here or you had a second mouse opportunity here. At this stage of the game going long, you may get a little bit of upside, but is it worth it? Nah, you don't want to chase. At this point, that's called chasing, and that's one of the main things as traders and investors that we want to avoid because it gets us into trouble. All right. Now, looking at this chart again, you guys see the consolidation starting here on today's chart. Now, we could also pull back to the 20 moving average, and that would be healthy as well. Another retrace back lower, maybe in a sideways pattern into this 20 would be a very bullish sign also. As we digest the gains, you have the weak hands take profits. You have more people buying up there, and then we see if we have another small move up. And again, I want to stress small because, we might have another day where the NASDAQ's up 40, 50, 60, obviously. But do we think there's going to be a major move of this caliber left in the market? Possibly, but most likely not. We're looking at a turn date for the market back down early May, so we'll have to see if that comes to fruition. We'll get a better date. Obviously, that's a rough date at this stage of the game because it's so far away, but as we get closer and we see the moves in the market and the chart pattern, the pattern price and time, which basically we use our formulas and our proprietary analysis to identify, then we'll know on a closer scale to which date is exactly going to be that turn date in the markets and a possible move one way or the other. Okay, so keep that in mind, folks, is that we are sitting right here on the head and shoulder breakout line. And again, just to draw that in here, we had mentioned this in the charts. Obviously, you have a head there, inverse, and excuse me, make sure you understand that inverse head and shoulders. So you have inverse head here, shoulder, and shoulder here. And now we're right on that breakout line. We broke it, but now we're consolidating. The question is, do we pull back to the 20 and the 50 right here, or do we consolidate in a sideways motion here before another little push up? Should we close below that 50 down here, we would have to reevaluate. We want to see a close and then a move lower, a breaking of that low candle to confirm the move, because way too many times, too many amateurs get freaked out or faked out by little moves like that in the market when they do it on purpose to scare the shorts out and accumulate. The institutions do it to accumulate on the long side. So we'll continue to watch that. Let's look at the NASDAQ quickly here, and you can see the same thing. Let me draw in the lines as always here, folks. All right, draw them as accurately as we can. And you can see here, you had the little breakup above that inverse head and shoulders. Here's the head, here's the shoulder, here's the other shoulder over here. And now again, we consolidated. The NASDAQ was up 5 points. The key on the NASDAQ, in my opinion, in our opinion, you maintained a close above 2,400. Right now, that's key. Should we break 2,400, then we may come down to this 20 moving average, which is about, let's see here. You may even fill the gap, and that's looking more, that could be possible should we break that line. So keep that in mind, folks, is that you do have gaps in this chart, and right there's the gap, and that 20 moving average is going to move up right to that gap area. So should we even consolidate and pull back a little? You could see a move something like that. That wouldn't be out of character to see a fill of the gap meeting the 20 moving average before another move up in this market. But as I mentioned in the SPY chart on the daily, most of the move is out. You may have another strong push in this market, but the majority of the move, which was from here to here especially, I mean, that's a huge move. You're talking about, to calculate that, it looks like from around 2180 to 2400. You're talking about 220 points there or so, which is basically 10% move in the NASDAQ is now out of the market. And you may have another 3 to 5% up, but then at that point, that's about it. And then we are going to look for another push down. Now, whether or not we take out lows, that's not, at this stage of the game, we can't assume that. In a very worst case scenario, you're looking at another double bottom here, or it would be almost a triple bottom from this point on the downside. One thing I really want to stress today, and I mentioned psychology in the beginning of the video, more and more people are becoming bullish again very quickly. And the sentiment changes so quickly these days that it's very important to keep these indicators up and alerted. You just have too many people already calling bottoms and off to the races we go and blah, 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 and everyone's putting money to work again, and that's not a good thing. By no stretch is this economy out of a recession yet. By no stretch is this market out of a credit crunch or credit crisis. And we've had large earnings, and I want to show Apple, for instance. Apple. Look at the move on Apple here from the lows, all right? This is basically from 115 to 158 $58 a share, a retrace, which was a beautiful buying opportunity for the next leg up in the market, which we had called precisely. And now you have it topping out here around 168. Now, they report earnings on Wednesday, I believe. And my only concern with them is, now, we never play earnings. I don't want to stress that, folks. We never play earnings because Apple could go up 20 points or it could drop 20 points. We don't know, frankly. It's luck of the draw at that stage. But what this is happening with all these good earnings reports that are coming out is that the market's pricing in better earnings for all the ones that are reporting over the next couple weeks. And what that means is they have to perform even better than they would have a week ago just to have the stock go up because the stock's already factoring in. All right, here's a factor of a certain amount of earnings, well, retrace. Now here's factoring in even better earnings. So now Apple probably does very well in earnings. I really don't know. I don't follow earnings or estimates, really. We just look at the charts. But this is not something I would be playing into earnings if I were to even play it. So just keep that in mind, folks. And again, I stress this and I say this loud and clear. We do not ever play anything. We do not hold anything into earnings, ever, ever, ever. So do not mistake that. But I'm just pointing out charts. And the same thing goes for a Baidu chart. Baidu, look at this move. It also is factoring in, Google had great earnings, so it's factoring in great earnings for Baidu, B-I-D-U. And again, that can be a psychological hurdle to clear. And it doesn't mean the stock can't do it, but it just makes it a little harder. So we have to realize that and understand that, folks, and keep it in mind. All right. Again, Baidu had a phenomenal day today, up $16.50. China stocks overall, like JRJC, China Financial Online, $1.45 move up here right into that 50 moving average. Stocks like GSI had a great move. Look at that move there, up $1.68 to $8.88. And CHNR, which is a mining stock, had a very nice move of $1.79 to $21.75. And the interesting thing about these China stocks is the Chinese market has been hammered of late. And we may be seeing signs that should the Chinese market be able to recoup and start moving back up again, maybe the Chinese stocks can get a little play on the upside. Anything that was up big today, I would stay away from. By no stretch would I go near anything that's up, but should they retrace back down, consolidate, maybe a play involved there. All right, guys, come join the E-Mini Stock Chat to learn about trading and investing. We answer all questions. We give advice throughout the day. Also, come join the Swing Trade Alerts, the Options Alerts, and those institutions out there. We're taking on more and more clients, but our plate is filling up. So I strongly encourage for private consulting for your hedge fund or your fund, get in touch with us ASAP. Take care, guys.